Wow. I mean, I'm actually a little bit surprised that so many of you came to this session. I was very worried. The other sessions are about, entrepreneurship, about women empowerment, and about food security. These are all very sexy and important issues. But wow, inflation, right? You really want to talk about inflation? So we're going to try and have a little bit of fun and hopefully learn something from the panelists here. We've got an excellent group of people. We've got a former Bank of Japan Policy Board member. We've got a very persistent scholar on Japanese corporations with Ulrike, and we've got one of the most astute followers of the various aspects of Japan with Peter here. And at the outset, let me ask for a show of hands. So officially here in Japan, the inflation rate is running around 2.8, 2.9%. In your own life, in your own family life, are prices rising faster than 3% or just about right? Who thinks prices are rising faster than 3%? Okay, and who thinks 3% is just about right? Okay, and then one other question. How many of you think that next year, when we meet again in the autumn of 2023, how many of you think that inflation is going to be accelerating at a faster pace than it is today? How many of you think it's going to be faster next year? Wow. So that's basically a 2/3, almost 3/4 majority who think that inflation is going to be accelerating at a faster pace. So it's an issue that's not going to go away very fast. To frame, the concern about inflation, I've asked each of the panelists to prepare, maybe a 3 to 4 minute little speech about what their primary concerns are about inflation. So without further ado, Shirai-san.
Yes, thank you very much. So the biggest concern related to inflation is clearly Federal Reserve's monetary policy. That is most influential, and destabilizing global stock market, exchange rate, interest rate. So we have to closely watch. So what is concerned is that since 2021, Fed projection about inflation was always underestimated, and so therefore they have to accelerate their interest rate hike. Now, recently, their September projection, they showed right now their policy rate is 3 to 3.25%. So by end of this year, they're saying they're going to raise it to 3.05 to 4%, and next year to 4.25 to 4.5 to 4.75%. So nearly 5% next year. But what is not clear is that in 2020, Federal Reserve adopted price level monetary policy framework, shifting from inflation targeting. So that means they have to look at past inflation. So in order to have a price level staying at 2%, the current interest rate projection is not hawkish enough. So they have to actually put a higher interest rate to lower price to lower price level. It's a bit technically complex, but it's not clear whether Fed is doing price level targeting or inflation targeting. Therefore, there's a lot of uncertainty with regards to Fed monetary policy tightening, and therefore it's until we are not, clear about what monetary policy framework they're going to take, I think there is a lot of instability, especially in the emerging economy. They have a capital fly, foreign exchange depreciation, and they have to raise interest rate. There's a risk of deflation. Thank you.
So Shirai-san is making a very important point that, there is an increase in inflation. And for particularly financial markets and ultimately for the outlook for economies, it is the response by the policymakers that really enacts the transition mechanism. And the Federal Reserve was the first of the big central banks to begin increasing interest rates. And one of the problems is that there's a lot of people who've lost a little bit of trust in the ability of the Federal Reserve to actually forecast inflation and to forecast the right policy response. What do I mean by that? Just as late as December last year, the Federal Reserve was talking about inflation being transitory, of being just a blip that would go away. But of course, we've learned the hard way that inflation is not transitory. And by the way, it is not just because of the push up in gas prices, in energy prices, and in food prices, but it's also because of strong demand in the United States of America. So we've got a supply shock compounded by demand pull with, for example, wages, incomes in the United States now rising by 6 or 7%. So from that perspective, stepping on the brake, right, is very important. But there's a little bit of a loss of trust that has happened into policymakers' ability to actually predict and assure markets that they know what they're doing. So we've got uncertainty on the monetary policy front. Peter, what about you? What is your concern about inflation?
Picking up from that, I think one concern now, as you both have suggested, is that the Fed could go too far. And there are some models that suggest that perhaps, so there was one sort of theoretical model that suggested maybe interest rates should be 20% in the United States right now. And of course, the Fed is not going to follow any single model, but they are following the notion that they must act perhaps overzealously to correct any of those misimpressions that you mentioned, that they might be too willing to allow inflation. Now they're saying absolutely not. We must keep inflation under control. We must keep inflation expectations under control. And that, I think, is the fear at the moment. I don't think that's oil price, the initial causes of inflation, such as higher oil prices or weather dislocations that cause food shortages. I think, or even, for example, the shortage of some metals that go into EVs that led to, and other shortage of semiconductors that led car prices to go up so sharply, especially in the U.S., and even used car prices to go up sharply. I think those factors are gradually being addressed, and now we're hearing there might be a semiconductor surplus. That industry just has such a history of booms and busts. So I think the initial causes of inflation are probably easing, and we don't need to worry about them so much anymore. And the real worry is this question of inflation expectations and people just expecting to get a 7% wage increase every year, whether the underlying conditions justify that or not. And so the Fed feels it must nip that in the bud. It must make sure that such that kind of inflation expectation does not develop, and that's why they're so hawkish at the moment. But I think every reaction has a counter reaction, and the fear is that they would hit the brakes so hard that the U.S. economy would come to a crashing halt. And that would affect us back in Japan. Here in Japan, I don't think those types of expectations have developed yet. I've been covering Japan economy off and on for 30 years. This is the first time that many of us, including people at the Fed, are dealing with this question of what is the cause of inflation? How can it be kept under control? But I would tend to agree with the Bank of Japan's prediction that inflation in Japan will come under control next year, and the current 2.8 or 3% figure would in fact be transitory. I don't know what transitory means. We have this discussion in the Wall Street Journal's Tokyo Bureau. What is transitory? Does it mean a year, a month, a decade? If it ends after a decade, can we call that transitory? And how do you translate that into Japanese? Ichiji teki or something. Anyway, but I see. Shirai-san is raised. Yes.
Yeah, I just wanted to add information to what Peter said. I think when public talks about these prices, they have to distinguish between high level of prices and inflation. There's no question the rate of inflation is going down. So, right now in the case of Japan, 3%, it's going to be below 2%. US above 8%. It's going to come down. So inflation is going to come down, but the price level stay high. So, price level and inflation is the incremental amount of price level, right? So we have to distinguish between high prices and inflation. So inflation rate is going to come down, but price level remain high. That's all.
What is interesting, price level stays high, but of course, in Japan, it's now very low. I mean, I can buy for $1 twice the hamburger that I can buy in Los Angeles, right? And even though McDonald's recently is doing a little neage, right? Still, from a global perspective, because of the exchange rate adjustment forced by the monetary policy, right? Japan, the absolute level of wages, the absolute level, prices, is still very, very low here. What is interesting in Peter's remarks is, I think you point to something, what I thought was interesting. I mean, raising interest rates is an incredibly blunt instrument.
Yeah.
Because even though there is inflation in one or two or three different sectors, right? When you raise interest rates, you affect every aspect of the financial economy. Mortgage rates go sky high. Your car loan goes sky high. And in the United States of America, interest rate sensitivity is very, very high. And so as a result of that, exactly as Peter points out, you are actually beginning to see signs of demand in the United States, whether it is housing demand, whether it is demand for durable goods, actually coming down. So in other words, the braking effect of the Federal Reserve is not broken. In fact, it is working quite well. Now, Ulrike is always good fun because, number one, she's a fellow optimist on Japan, which is always very important, right? But more importantly, Ulrike doesn't care about macro. She cares about individual companies. She cares about what are companies doing, what is going on. She's an expert on Japanese small and medium-sized as well as large companies. And Ulrike, what has been so far the impact on Japanese companies from the rise in global inflation, because the cost push pressures from rising energy costs, etc., obviously very real. What's your assessment of how corporate Japan is coping with the global rise in inflation?
Yeah, well, thank you, Jesper. Thank you, everybody, for having me. I'm sorry I can't be there in person. I'd love to actually mingle with you all. So we'll have to do it this way. Hopefully next year we can all meet in person. So from a business perspective, the important term here, or the two important terms that I would like to talk about. One is this matter of uncertainty, and the other is the question of resilience. So uncertainty is the one thing that business cannot deal with, right? Everything else, companies, any single company can address. If they know what's going to happen, there'll be some ways to position, to act accordingly. But right now, it's not just inflation, right? It's the exchange rates, the supply chains, wars. And so there's a lot happening. And I think of all of these, inflation, especially for Japanese companies, is actually the one that's least uncertain. It's coming, but that train is moving very slowly. I mean, you just mentioned next year sometime, right? So companies have a long time to prepare for this. What they didn't have a long time preparing for was this funky exchange rate thing, which incidentally is not a yen problem, right? It's a dollar problem, as we've already established, right? So the pound and the euro and so forth are all in the same boat with the yen. And so, okay, so how resilient the Japanese company is going to be in the face of these uncertainties? And just since I'm speaking to you from California, let me just say just a short thing about the United States. Americans pride themselves that the U.S. economy is fabulously resilient. And by the way, the definition of resilience is the ability to bounce back from a bad event, right? So bad event happens, and then the shock, and how long does it take for the economy to bounce back? And Americans are actually quite self-confident about this. They think because it's a huge country, all the resources that we need, we have a lot of talent, opportunity. One person's recession is another person's chance. So Americans think that their economy is usually pretty good at bouncing back, whereas Japanese typically think that Japan is not really good at bouncing back. And I would like to argue the opposite. I think that the Japanese economy has been proven incredibly resilient over the last 3 decades. I mean, 3 decades of total shocks, the Lehman shock, as you call it, right? The global financial crisis, the 2011, the earthquake, tsunami, all of that, horrible events, and now America going sort of crazy on interest rates, and the Japanese economy has done absolutely nothing, which most people in Japan think is a bad thing. But you could actually reframe it and say, well, isn't that a form of resilience? That the Japanese economy has remained, at its core, fairly strong, the 3rd largest economy in the world still, and part of the reason that this is happening, by the way, is that Japanese institutions are sticky, and and sometimes that makes us impatient, and we look at this from the distance, and certainly from close up, and say, well, why is nothing happening here? And so I just want to change the POV a little bit on this and say, well, maybe there's some good news here. And so then how resilient are Japan's best companies? And I'm not saying this is going to be easy for them. I mean, all of the CFOs of the large Japanese companies are getting gray hair now. I mean, everybody is worried about the exchange rate for sure. But let me just point out one way in which this could be not so bad news. I mean, the exchange rate, which is that for the exchange rate goes both ways, right? And for Japan's largest companies, where sales are over 50% abroad in dollar denominated, the current scenario is not all that bad. If they repatriate some of those profits back to Japan, it's like, great, shot in the arm. So, and then there are some Japanese companies that don't even care. They charge in yen, so they don't care about the exchange rate, and the inflation generally, I don't think is really on the front burner of this. But I've been talking too long, so let me stop here, Jesper, and let's see what the audience, is interested in.
Of course, go ahead, Peter.
Just to hear your opinion, Professor Shada. Am I pronouncing that correctly? Ulrike, Professor Ulrike. If this cheap yen lasts a long time, could manufacturing come back even more in Japan? As you said, it's so difficult to act when the situation is uncertain and when exchange rates are so volatile, and we've seen that this year. And that's what we often hear from the finance ministry, is not so much the level they don't like, it's this incredible volatility that is a problem. But if it calms down, is there an opportunity perhaps for manufacturing to recover even further in Japan?
I think that the companies that are currently have huge global production networks are quite happy with them. They're there for a reason. For whatever the historical starting point was, that the car companies, or Sony with its movie theater in Los Angeles and so forth. I don't think that there's a particular necessity seen to repatriate this, unless, of course, we get more uncoupling, decoupling, and wars and so forth. So there's the resource dependence concern. Well, should we bring this back to Japan? But just from an economic perspective, from a business strategy perspective, and Peter, mind you, I'm looking at Japan's leading companies, right? So the best that are very strategic about this, and they know what they're doing. They have a plan and a vision with what they're doing, and I think they're as I just said, they're concerned about these uncertainties, but I don't think they see a reason to bring car manufacturing back to Japan. Maybe bring more of it to Southeast Asia or something, so there could be a relocation. But yeah, I don't see that. I would be curious to hear why you think that would be the mechanism.
So very, very good on that. A couple of points. And Shirai-san, I'm going to come to you in just a second. Just some facts. Furukawa Electric, which is one of the leading robotic companies, just announced a doubling of their capacity here in Japan. Google just announced a big investment in a center, here in Japan. By the way, it's a fun statistics. A software engineer in Tokyo is now 75% cheaper than a software engineer in Silicon Valley. And by the way, they're 30% cheaper than a software engineer in Hanoi. So the exchange rate as a trigger for a little bit of onshoring, absolutely that is a factor. A counterpoint that you need to be very aware of in this new global reality is what happened for some of the big manufacturing companies. Within 27 hours of President Biden steering the Inflation Reduction Act through Congress, within 27 hours, Toyota, Honda, Kia, Panasonic announced approximately $25 billion of new factory building in the United States of America. So this America first and foremost, because under the mantle of environmentally sustainable policies, there actually have been what we used to call trade barriers being put into place, because if you build a car in the United States, if you want to be eligible for the $7,500, cash back when buying an electric vehicle, that electric vehicle has to be 100% built in the United States. It cannot be built in Kitakyushu. So it's interesting that politics is actually coming into the way, in the sense of that the predominance of national economic security policy, right, together with an environmental, is actually leading to a very, very dramatic change in America first and foremost in terms of industrial policy. But Shirai-san,
Yeah.
you used to do battle with Governor Kuroda at the Bank of Japan. Is the Bank of Japan doing the right thing right now? I mean, there's a little bit of a pickup in inflation, cost push inflation, et cetera, but and the yen is weakening so dramatically. Any comments from you? Is the BOJ doing the right thing?
Yeah, so many media asking me, why Bank of Japan is doing and maintaining status quo, keeping low interest rate, while many other central banks are raising interest rate. So, people are paying attention to the Bank of Japan's policy. But I think the important thing is, one issue. One issue is what's happening to inflation level. And the second issue is whether raising interest rate will give some solution to the sharp yen's depreciation. As for the first question, inflation rate, as you mentioned, Japan's inflation is around headline 3%. Excluding fresh food is 2.8%, and core excluding food and energy is just 1.6%. Totally different story from United States, where inflation is above 8%, the euro area 10%, right? So some of the audience mentioned as that some of the inflations are much higher than 3%, but that's normal because when people look at the prices, people only pay attention to the daily product prices, gasoline prices. So those are very rising above 10%. So people feel inflation is above 3%. But there is no question that inflation is much higher in US and Europe. So therefore, their inflation target is 2%. So in terms of meet the credibility of monetary policy and then try to lower inflation towards 2%, the ECB or Federal Reserve have no choice but to raise interest rate. But in the case of Japan, 3% inflation, above 2% inflation target, but it's not extremely high. So, at this kind of inflation, probably BOJ is appropriate to maintain low interest rate. The second question, what happens if the Bank of Japan raise interest rate? And what's happening to the global interest rate? Like Korea and many central banks are raising interest rate. What's happening to the exchange rate? Unfortunately, many central banks raise the interest rate, but they cannot stop the depreciation of their currency. As Ulrike mentioned, this is the dollar strength. not the Japanese yen depreciation. And look at Korea. Korea is already raising interest rate much ahead of Federal Reserve from last year, and they are keeping their policy rate more or less in line with Federal Reserve, but their Korean won against US dollar is depreciating about 18% year to date. So just by raising interest rate doesn't mean Japan can sort out the depreciation of Japanese yen. So the point is, we have to look at inflation, and current inflation is so high that the central bank have to raise interest rate. So in the case of Europe and United States, yes. And then, as Jasper mentioned, US, their inflation is coming not only from commodity prices, but the high demand, right? So, and therefore, faced by raising interest rate, as you mentioned, mortgage, rates are high. So, it's kind of affecting, it's effective. So it's trying to slow down aggregate demand. But, more worrisome is Europe, right? The euro area. Their inflation, as they say, are purely coming from energy and nothing to do with aggregate demand. But they have to raise interest rate, so they are more worried that raising interest rate will damage the, their economic growth. So they might have a negative growth. So, raising interest rate is not extremely good in terms of economic recovery. So just to summarize, the Japan's inflation is 3%. It's getting high, but it's not extremely high. And then to support demand, and the Japanese out of gap is negative, still excess supply. So the central bank have to support the low interest rate. So I think what Bank of Japan is doing is appropriate.
But Shirai-san, speaking up for the Bank of Japan, this is the way we like it. One team, one dream. I'd like to pivot a little bit because there is, of course, one country that is doing exactly the opposite of the United States. We talked in the plenary session about Japan being a middle power, about Japan's excellent and potential important role mediating between the United States of America and the People's Republic of China. And as you are aware, the People's Republic of China is now stepping on the accelerator. They are cutting interest rates. They are expanding fiscal policy because in the People's Republic of China, the problem is not inflation. The problem is actually deflation, disinflation, a very high unemployment rate, with 1 in 4 of the Chinese in their 20s actually without a job, right? So this acceleration in the People's Republic of China and the deceleration in the United States of America, Japan sort of being caught in the middle, right, is sort of an interesting aspect that comes to place as well. I want to pivot, however, to you, Peter, because, as an economist, as an investor, I'm interested in companies having price power, right? Being able to pass on some of the price increases that are coming through and making a little bit more money, right, along the way, which is certainly what's happening. But Japan is different from the rest of the world in one area. Wages are not growing. Wages are not going up. So even though my absolute level of inflation is still very low at 2.5%, 3%, the fact that nominal wages are not growing, right, actually reduces the purchasing power of the Japanese people. So Peter, to you, since, you live and breathe not just the Japanese economy, not just Japanese companies, but also Japan's society, right, at large, how come wages are not growing, and what can be done, if anything, to actually make wages grow? Are you paying your workers more? Oh, sorry, that's an unfair question.
I can't talk too much about that, but it is a discussion in our bureau, and sometimes, in previous years, it was natural for the company to raise wages. Being a U.S.-based company where workers still do expect a raise every year, it was natural to raise wages, and everyone was happy with that here in here in Japan. But this year, I think for the first time, a number of people are asking, wait a minute, my previously there wasn't much discussion of that because prices weren't going up. This year, even if it's 3%, as Shirai-san said, some people may feel like it's more because they're seeing it every day in terms of fresh food and so on. This year, some people did ask me, hey, we're in Japan, but we have inflation for the first time, and is the company going to reflect that? And I don't know what's happening inside Japanese companies, whether workers are raising their voices and saying, look, we need at least a 3% raise. If we want to improve our living standards, we need more like a 5% raise. I hope that they are raising their voices in that direction, because I agree it's a crucial element of the Japanese economic recovery. If wages are flat and prices are going up 3%, it's not huge inflation. It's not worrisome from a central bank perspective, but it is worrisome from an overall long-term growth perspective. The flip side is that workers here do have much more job security, and they don't face the types of mass layoffs that even we saw in the U.S. when the pandemic first hit. The unemployment rate went to 15%, I think, briefly. So there is a plus and minus side to the Japanese economy, but I personally don't have a great answer on why wages seem to be so resistant to growing here when you do see them rising in the U.S. in response to inflation and worker shortages.
Professor Dr. Ulrike Schede.
So, Peter, thank you. That's let me footnote that in two ways. One is the new hires, because the labor shortage in Japan is coming, and the new hires are already making more money. So company after company, you open the Nikkei, is announcing that they're raising the wages for the new hires, if for no other reason than that there's a competition for talent. So I would expect that to happen pretty soon, the wage raises. But Peter, you make a very important point, and let me amplify that. The Japanese wages are, of course, structured very differently, and they don't have to include health insurance. They don't have to or account for the fact that health insurance in the United States is going crazy expensive right now. They don't have to account for the fact that housing and rents in the United States are going similarly crazy, because many companies offer housing. And so if you adjust and control for all of these extras that Japanese people get, and if you were to look at what the value is of those, you would actually find that you get a very different story. That in terms of real wages, so economists have a different way, but if I look at what people take home at the end of the day in terms of net monthly income in the United States, that has not gone up. It is exactly the things that I mentioned, the rent and health insurance in particular, that is eating up whatever increase there may be. And Japanese employees happily, as you just said, they not only is there lifetime employment, there were some of these other goodies that are associated with being, working in a large company. And 60% of Japanese employees still enjoy sort of a lifetime employment setting, when in the United States, I don't know what that percentage is, but it's probably less than 20%, right? So thank you for bringing that up, Peter. They're very important points.
So Ulrike's point is incredibly important. In the United States, the average worker spends now 60% on housing and transportation, right? And in Japan, the equivalent is about 22%. It's not free, certainly not when you work for a small and medium-sized company, maybe when you work for Fanuc, right? But the provision of basic social infrastructure, and Ulrike mentioned healthcare, obviously Japan shines. Japan is very good at providing that basic social infrastructure at very affordable prices. And for all intents and purposes, on the provision of basic social infrastructure, there really is no cost increases. Take healthcare, for example. The Ministry of Finance, I bet my bottom dollar, is going to make sure that the average pharmaceutical cost and the average cost to actually utilize Japan's public healthcare system is actually going to fall next year by about 1.5%, something like that, right? So the management of not the central bank, but of the other parts of the government to actually maintain the purchasing power of the people for basic social goods is really something where Japan, stands out very, very well. Now, we've got 10 minutes before the Q&A, and I look forward to some of your questions. I want to do one final pivot, which is that, we do have food inflation, we do have energy inflation, and that tends to hit the lower income levels, right? Much, much harder than it hits the higher income levels. That's perfectly normal, right? This risk of inflation doing what it has always done, because every revolution in the world has always been preceded by high food inflation, right? When the price for food, and it was mentioned in the plenary panel, when the price for food goes up, when the price for energy and heating goes up, right, people get angry and they will forget about ESG, right? They basically want to have food on their table, and this risk of inflation feeding social instability. I'd like a comment. Shirai-san, I know it's a little bit outside of your monetary domain, but you are a responsible citizen.
Yeah. Well, I look at the macroeconomic policy. So on October 3rd, the Prime Minister Kishida made a remark at the Diet, and he said the electricity prices are going to go up significantly by spring next year. So he's planning to introduce unprecedented direct measures to cope with the electricity price hike. And I think they're going to prepare the second supplementary budget quite soon. So we will know it. But I'm not sure what he's talking about. But if he's talking about sort of defreeze the ceiling set on electricity, something like United Kingdom is announcing and France introduced, I'm not sure. It's budgetary, very costly, but he maybe try to do additional measure to especially cope with this electricity, because the electricity right now is already rising 70% compared to previous year. But let's check it. But I think, Japan has some deficit issues, and Japanese services sector is improving from this month. We have more foreign tourists. So service sectors are definitely improving. And based on the Tankan survey, Bank of Japan's Tankan survey, the profit in the service sector is improving. So economy is not extremely bad, but of course, for low-income people, they are suffering. So I think government should do more support for low-income people. But I think in soon, they want to provide 5万円, right? Also, that may not be enough. But I think we should really support more low-income people. But to have a total rice freeze, I think we have to check what will happen to the budget. And finally, one more thing. I think what is more important, this Ukraine war reminded us that it's very risky to depend on a fossil fuel too much, right? Because many of those fossil fuels are produced by non-democratic countries. So, we should not forget, we should put more investment in low carbon renewable energies. It's there's under investment for many years. So, the government have to do more investment and do more strategy to transition into less dependent economy on fossil fuel.
Fantastic. Peter.
Yeah, I agree. It's in terms of support for energy prices, and I think this is an issue in parts of Europe as well as Japan. I mean, what you really do want, it's easy for sort of journalist or pundit to say, but what you really do want is to, as Shirai-san said, support those who are struggling, only those who are struggling because of high fuel prices or high cost of fresh food. If you set a price cap for oil or gasoline generally in the economy and give support to every person, rich or poor, then you're wiping out the price signal that high fuel prices are supposed to send, and hopefully, people conserve more in these times and try to reduce their use of electricity and gas, especially during this winter. And one way to make them do that is through the price signal of higher prices. So it's in that sense, it's a good thing. You just don't want to have a person freeze because they don't have their money for electricity. So it's again easy for me to say, but I think that is the balance that is needed when addressing the high fuel price issue.
So Peter is making, Peter and Shidai-san making a fantastic point. Now, do you want a stock tip? What's one sector that's really going to benefit from high fuel prices? The bicycle sector. So, if you have Shimano or Giant in Taiwan, I mean, this is not a joke, right?
Yeah.
I mean, this is because everybody, oh my God, the sky is falling. No. As Ulrike points out, someone's recession is someone else's opportunity. In investment, you say the cure for inflation is higher prices. Because if you've got higher prices, you have to charge higher prices, but I have new technology. Now I can start to undercut you and actually have an entrepreneurial boom, right? So inflation, exactly as Peter pointed out, actually raising the metabolism of competition in the economy is something that's very, very important. And that's why I personally am very bullish on the United States of America, because in the United States, if you look at the new company formation, right? Before COVID, it used to run, it's about 100,000 new companies get created in America every month. That shot up to 300,000, right? And is now still running at about 250, 280,000 new companies being set up. So yes, inflation disrupts some of the existing suppliers, right? But those with new technology, and as Ulrike points out, those who actually manage their labor better, who can actually create an environment where they can attract the productive, the A-team, to their team, that's creating uncertainty, but it's also creating the solution, right, to what's going on. Ulrike, from your perspective, impact on society, quickly.
Yeah, so I like this point about increasing a little bit the liquidity, right? So it's actually kind of funny that we sit here and worry about inflation when for the last 20 years we've been sitting there talking about, how can we get Japan to 2%, right? And so it's almost as if, we couldn't get enough of it for the last 2 decades, and now we're saying, oh no, we don't want it.
It's the wrong kind of inflation.
Yeah, exactly. So yeah, which kind of inflation? That's right. But a little bit more market pressures and discipline would probably not be that bad. The problem with inflation is it's like fire, right? You don't want to play with it because once it takes over, you can't extinguish it. So that's the concern. But this metabolism aspect, of course, is incredibly important for Japan. So what does it take to get a little bit more, liquidity into that system, and maybe some anxiety is what the doctor ordered. So in that sense, I think that there's some good news. What I'm actually thinking might happen is that the United States will fall into a recession, that this will cool down, that the Federal Reserve might say, we have to lower our interest rates, which will topple the exchange rate upside down. And so if we did the same thing in 6 months from now, we would probably have a very different conversation about any and all of this. So the uncertainty is the problem. And so from a society perspective, I think people don't like uncertainty in general, right? And unlike large businesses that have good means to deal with it, individual households often don't. And so therefore, I like the idea of programs for households that have a difficult time to pay, which, by the way, exist in the United States, right? So there are regular announcements that come with the electricity bill, with the cable and internet bill, that if you fall into a certain category of household, you can get a discount on these bills. So the United States does that already. So there's a program, and maybe that's something that Japan might want to look at if the energy crisis.
Thank you. It's very interesting, right? So, I mean, it looks like, oh my God, we've got the perfect storm, right? With a war going on, supply chain disruptions, this pent-up demand after COVID, and all of a sudden you end up with, very, very high rates of inflation. But when you actually look a little bit beneath that, right, you actually see that the adjustment mechanism, can actually work. And most importantly, in my personal opinion, is the fact that actually the brakes that the Federal Reserve is applying is actually working, in the sense of that the slowdown in the housing market, the slowdown in the interest rate sensitive sectors, is already beginning. Whether it will lead to a recession, I'm more optimistic than Ulrike. I think that ironically, the US government actually is very competent at the moment. So I think that they will actually manage a path towards a soft landing, but that's my opinion. You don't want to hear about my opinion. You want to hear about your opinion. Time for Q&A. Any questions on any of the issues? Please, sir, if you could very quickly state your name, and then you've got exactly 29 seconds to ask your question.
Okay.
And if you go over 29 seconds, you have to buy a bottle of champagne for everybody.
I see. I'm Daiki from Harmonia. I'm CEO. My job is to advise retail companies on pricing strategies. And with the gap between CPI and PPI in Japan's situation, how would you like retail company to adjust their prices?
Okay, excellent. So margin squeeze, and how do retailers adjust their prices? Murata-san.
Question to Shirai-san. I'm not an economist, but managing company, private sector. And I'm asking my sales team to increase the price because cost of the products already increased by 5%, 10%. My question is there any possibility that the interest rate at the last moment may trigger the further inflation? Was increasing cost of capital. President need to increasing the gross margin. So that's a question to the Shirai-san.
Okay, very, very in the back there. Saito-san.
Policymakers are important, and the Bank of Japan's governor will change next year. What would be the very important aspects to be the governor of Bank of Japan? This is to Shirai-san. And among many aspects, I think internationality is important. We've already talked about a lot of candidates. I'm not going to point out who will be, but only the aspects that I would like to ask.
Great. Shirai-san, that's two questions for you. Let's start with you.
Yeah, so there's a gap between CPI-based inflation and PPI-based inflation. So finally, Japanese company tried to pass on some of increased import costs on their final retail product prices. So, but still, compared to the United States, the margin is much lower. So I think for the first time in long history, the Japanese company started to, finally adjust about in terms of passing on increased cost onto the final price. But I think at the same time, they got to do more research and development, improve productivity to catch up with this increased high margins. As for this cost of capital, so if interest rates go up, cost of capital is going up, just like the United States and Europe. So those companies are going to have more difficult time. But in the case of Japan, as you know, the Bank of Japan is maintaining low interest rate, so the cost of capital remains low. The final question about BOJ's policy, I think, a couple of things the Bank of Japan can do. I think they can improve their communication strategy against public and also global audience, and then let public and also especially public. Probably BOJ's policy is becoming too complex, and so public is not really understanding what's happening. And I think it's time for central bank to spend more time to improve communication and have a direct dialogue with the public. And also, I think greater collaboration with the central bank in the world with respect to sustainable financial market is significantly important. The central bank can do much more in terms of this developing financial market. I think greater communication with other central bank in the world is very important.
Well, the central bank governor will change. You've learned in the plenary session, 8 members of the New Capitalism panel are from the G1 group. So maybe Shirai-san, we should nominate you to be the central bank governor. We've got a couple of questions from the virtual world, from the online world, please.
Yes, so the first question is in 2 parts to both panelists, and then there's another question after. So please attribute the champagne to the online participants and not me. So first question, to what extent does the panel consider current inflation trends and dynamics to be structural inflation as compared to temporary supply or demand factors? And how do the panel members conceive of and define structural inflation? So this concept can be controversial academically, right? So that's the first question to the panel. And then the second question, are we okay with that? The second question would be, this is actually to Professor Shirai-san. And over the past few years, Japan has been welcoming high-skilled foreign workers with visas while considering the yen dropping about 30% compared to the US dollar in the past year. Would Japan continue to be lucrative for foreign workers in the future?
Excellent. Peter, structural, cyclical.
I think it's cyclical, and I think, and I am maybe still one of the last remaining members of the team transitory that thinks this is transitory. Maybe transitory means 5 years, but I think it is one may say a one-time phenomenon involving the combination of the pandemic, the war in Ukraine, high energy prices, climate change, and that we shouldn't overreact and consider this some sort of permanent feature of the economy. And I think part of the problem is, when we talk about inflation, it is a number, like a single number, 3% or 2.8%, or then we have core and core, as Shirai-san mentioned, the core, which is minus fresh food and energy, is 1.6%. But really, inflation is so many different prices at once, and it may be caused not by sort of a generalized structural mismatch of demand versus supply, but a perhaps temporary mismatch of supply and demand in particular areas, such as, again, to use the semiconductor example, especially last year, there was a shortage of semiconductors that affected so many industries, but it was not a permanent structural feature of industry.
Just to give you the counterexample, and remember, I'm the optimist, but the counterexample deserves to be hearing because we live in a time of uncertainty. 3 structural things have changed. The first one is that the era of globalization is over. Specifically, China, as a factory of the world, is being priced out of global markets because of geostrategical and economic security policy concerns. So as a result of that, a new supplier of lower cost goods, right, is being squeezed out of the market. And unfortunately, neither India nor Indonesia nor Africa is at this point in time reliably capable to supply the sort of goods that the People's Republic of China supplied so very quickly in just a very short, brief span of time. So end of globalization. Second issue is technological progress. The iPhone 14 is a nice little gimmick, but the improvement is actually absolutely teeny in terms of how it impacts your life and your quality of life and your actual utility. And there are plenty of people in the economic world who think that this great stagnation is in fact led by the fact that we've got a lot of prospective new technology, like in the biosciences, but that the actual application, when it actually becomes useful and purchasable for you and me, the impact is just going to be at least 5 to 10 years away, and that's when you're an optimist. And then, the final what was the final problem? The final problem is something that I'm going to be thrown off the stage for, which is ESG. Because, there's no question that, yes, we want a greener planet. Yes, we want better air. But are you prepared to pay the cost for it? Because no matter what the technologists say, the reality is that to actually get to the transition of decarbonizing the economy, the amount of investments and the amount of inflation generated as that transition needs to take place, right, is actually quite significant. This is not controversial. It's just an economist speaking. I'm all in favor of ESG and clean energy, but the actual costs, of managing that transition, cannot be but inflationary in the meantime. Now, Shirai-san, I think there was you were in the spotlight here. I think you are going to be nominated for the governor.
By the way, ESG, sustainable finance, is important. It's costly, but it creates opportunity, as we discussed. And if we just leave it as it is, we have a greater cost coming from a greater fiscal risk and natural disaster. So we have to be clear about it. About the question about yen's depreciation, yen's depreciation is not going to continue for too long. Just like a US dollar strength is not going to continue too long. Eventually, sometime early next year, we will know what will be the terminal rate with regards to federal fund rate. So once we know that, and I think inflation will gradually come down, probably interest rate coming from, exchange rate depreciation coming from interest rate differential will be weakened. So for time being, we may suffer from yen's depreciation, but it's not going to continue to stay there permanent.
Excellent. Ulrike, any final comments?
Yeah, on this last point, I agree with all three of you. So first of all, Peter, we're in the same camp. Yeah, I think this is transitory. Yes, but so these three things are happening, definitely. I'm not sure they're feeding into inflation necessarily. But they're adding new aspects. We have to wait for these new technologies, and globalization is going to change the way we think about supply chains and so forth and so on. But I was also thinking that the current exchange rate mess could actually help the renewable energy industry. So you mentioned bicycles earlier, Jesper, but I'm thinking, well, it should also be a shot in the arm for solar panels and and all this other stuff and the wind powers and so forth, because it's just clear that we need multiple sources of energy. And so I think that the ESG, I agree with Shirai-san on this, the ESG is an opportunity, not so much a cost.
Very good. I want to close the session by picking up the question about high school. If you do the calculation, if you're a Filipino nurse and, you work in Manila in the highest grade, admittedly, right, of the nursing, and you work in Japan, right, at the starting level, at $yen 170, you're better off in staying in Manila. So there's no question, right, that, the attractiveness of global labor to come to Japan, right, as wages are low, as the purchasing power of the yen is going down, is actually going to be put into question, right? Now, the interesting thing is, and this is the thought I want to leave you with, that actually the combination of the shortage of labor plus the inflationary uncertainty now is actually becoming a catalyst for corporate managers to change the way they go about managing their human capital in particular. And I'm very, very impressed. The most bullish thing on Japan has come out of one of the dinosaur companies. Sorry, is there anybody here from NTT? NTT is an old-style dinosaur, one of the most highly unionized companies in Japan. They have a new president, Shimada-san, right, since April the 1st. And what is he doing? He is actually proposing to change seniority-based compensation. And that is he is doing because he, as one of the leading Japanese brand companies and one of a good technology company, he is having problems attracting technology workers. Because technology workers now know that if I work for Google, if I work for SAP, I get higher paid, but it's not just the greed. It's not just the higher pay. It's also the entire career prospect that you have. So if the Japanese younger generation no longer gets to stand just on the escalator, waiting for every year to move up, but if there is actually something called empowerment, where I allow you as the best engineer in the team to actually become the leader of the team, even though some of your team members are older than you, if that change in the corporate culture happens, I think Ulrike is going to turn out to be too pessimistic in her outlook on Japan's corporate prowess and corporate performance. Hirai-san is going to be spot on, because former central bankers always are, in the sense that everything is going to work out right. And Peter will have a fantastic job paying his people more pay. Great. I want to thank everybody. Thank you very, very much. Thank you.